Alert, the Bank of Canada just slashed interest rates by a whopping 0.5%. Could this be the perfect moment to move from your condo to a family home? Find out why this rate cut matters to you. Hi, I'm Stephanie Nause with the Homeplicity Realty Group at Keller Williams here in Toronto. And for insider tips and must-know market updates, go ahead, hit that subscribe button, tap the notification bell so that you always are in the loop. So breaking news, the Bank of Canada has cut the overnight lending rate by a half percentage, bringing it down to 3.75%. Wow, this is the fourth consecutive cut this year, and prime is now 5.95. So what does this mean for you, especially if you're a couple, you own a condo, you're dreaming of getting into that family home? Well, first off, this is a significant rate cut that could greatly reduce your future mortgage payments, making that larger home more attainable. Here's the exciting part. The government is signaling that there's more cuts likely to come due to successful efforts in lowering inflation, which is now 1.6%. Experts from BMO predict that by next spring, mortgage rates could start to make more sense, whatever that means. RBC is forecasting another 0.5% cut in December, and experts expect the overnight rate to reach 2% by summer 25. So 2.2 Canadians have mortgages coming up for renewal in the next 2 years. A lot of them are homeowners that secured mortgages in 2021 at much lower rates. Salaries haven't increased significantly, so higher renewal rates are going to be too much of a strain. So this is adding pressure on the Bank of Canada to continue easing those rates to help out Canadians. So for you, this means acting now could lock in a lower interest rate before further market changes, and selling your condo and buying a new home with a closing date in the new year. That allows you to benefit from the current prices and potentially even lower interest rates upon closing. For first-time condo buyers, pay attention. We have probably seen the market bottom out. Buying now with a longer closing date means you can avoid the spring rush and capitalize on future rate drops. Canadian Real Estate Association has downgraded its forecast. They're expecting the market to remain kind of like in a holding pattern until next spring, but this is actually an opportunity in disguise. So with fewer buyers active now, there's less competition. That gives you more leverage when you're negotiating, and Canada's economy is showing signs of slowing down. So GDP is at an annualized 1%. This is well below the Bank of Canada's forecast, and unfortunately unemployment is rising. There's not a lot of evidence of a turnaround, so these factors kind of support the likelihood of further rate cuts to stimulate the economy. So when others are waiting for the perfect time, you can seize the moment. The trade-up opportunity is ripe now. By acting strategically, you can get ahead of the curve when the market does heat up in the spring. So if you are thinking about making a move, you're curious about how these changes impact you, call me 647-973-8392. Let's design a plan that's just right for you and your goals. And if this video gave you some valuable insights, go ahead, like it, share with friends who might benefit, leave a comment below. Are you planning on making any real estate moves? And remember, subscribe so you don't miss future updates that could influence your next big decision. See you in the next video.